Hello and a warm welcome. You've joined us in Market Fatafat right here on ET Now. I'm Ashesha Advaryu. With me is Ankita Saxena, and this is a show where we discuss all the stocks that are buzzing in trade today. But Ankita, before that, turning out to be a good day for the markets, isn't it?
Yes, absolutely, Ashesha. We are continuing on the run that we had seen on Friday on the back of that big boost coming in. And Nifty is managing to hold on above the 25,100 level still. I mean, there's no major, there's no reason to really worry because we are sustaining those moves. We are still above those levels. In Nifty Bank, even though we have cooled off a bit, but we are managing to hold on to those 25,100 levels with gains of 0.4% Nifty Bank also continues to gain, 0.6% gain coming in on Nifty Bank as well, especially the PSU pack that is doing well. That's trading up more than 1.5%. Indian Bank, Maharashtra Bank, India Bank, all of them trading with gains of 2.5+%. Also, besides that, it is the mid-cap index that is doing very well. In fact, the entire Smith's basket is continuing with its outperformance. From the mid-cap names, there's Bharat Forge, Emphasis, Persistent, BSC, and Voltas that are trading with gains of 2%. So these counters are doing very well as far as the mid-caps are concerned. But besides that, we have a couple of other names like, the entire banking financial names that are doing very well for obvious reasons. There's Kotak Bank, Jio Finance, Bajaj Finance, Axis Bank that are the top Nifty gainers. And on the losing side, we have Eternal, we have ICICI Bank, HDFC Life and M&M that are on the losing side. But largely, it's a positive day, advance decline ratio in the favor of advances.
Well, yes, but let's get started with all the stocks that are buzzing in trade today. And on the technical side, we have Sameet Chavan, Head of Research, Technical and Derivative at Angel One. And from the research desk, we have Kanishka and Rabinder joining us. Thank you so much for taking your time out and joining us. But the first stock that we have on our radar this afternoon is RITES and Hindustan Copper. RITES, the last time I checked, the stock was up nearly 4.5%. And Hindustan Copper is also holding on to some amount of gains in today's trading session. Remember, both these companies have signed an MOU for critical minerals mining. And they say that the MOU will jointly develop a rapid, reliable and sustainable supply chain of minerals and mines, including critical minerals both in India and overseas. So on the back of this MOU which both these companies have signed, both these companies are in focus today, holding on to gains in today's trading session.
All right, moving on then to the next counter that Sameet has picked out for us. Sameet, you picked out Laurus Labs for us from the pharma space. In fact, today itself it's trading with gains of 3+%. In the last 6 odd months, also 16 odd% gains coming in as far as Laurus Labs is concerned. Tell us on the charts, do you see the further up move because it is trading very, very close to its 52-week high? It's almost touched its 52-week high.
Good afternoon. Yes, clearly this mid-cap pharma stock has been, outperforming some of its larger peers. As you rightly pointed out, the stock is almost challenging its 52-week high. Overall, if you price-wise see, stock has been moving sharply upwards since last couple of weeks. And if you look at the volume activity, it has risen substantially in tandem with the price action. So overall, the positive outlook is likely to continue, wherein the next important cluster now would be around 700, 710, which coincides with its all-time highs as well. So overall, yes, we continue to remain a bit on this stock, and any decline from current level, probably say towards the 650, 640 levels would be a good buying opportunity. And we expect 600, 620 to act as a very strong support, and going ahead, as I said, 700, 710, these are the next levels to watch out for.
All right, moving on from Laurus Labs to the next counter that is in focus, and that's RailTel. It is on the back of order wins. The company has received work order from the State Project Director, Bihar Education Project Council for a supply amounting to 243 crore rupees. Plus, the company has also received a work order from the Department of Education, Samarka Shiksha, for the supply amounting to 16 odd crore rupees. So on the back of this, on the back of two order wins coming in for RailTel, the stock is up and away more than 1.5% in trade.
So on the back of order wins, the stock is holding up in trade. But shifting focus to MCX then, Rabinder, the stock is gaining on the back of SEBI nod for electricity derivatives. Tell us more about this.
Well, as India's leading commodity derivative exchange has received approval from Security Exchange Board of India to launch electricity derivative, marking a significant milestone in the evolution of India's energy trading landscape. And the electricity derivative contracts to be introduced by MCX will be enable generators, distribution companies and consumers to hedge against the price volatility and manage price risk more effectively by enhancing efficiency in the power market. So back of the SEBI approval, stock is up more than 7%.
All right, moving on then from MCX to the next counter. OFSS, Sameet, you picked out for us on the charts. Tell us, what do you see on the charts for this one? Again, a counter that's doing very well in today's trading session and has picked up pace in the last 1 month. In the 6 months, it has been consolidating, but 1 month it has really picked up pace.
See, clearly last calendar year 2024 was stupendous for this particular counter. Stock prices literally given 4 to 5 times returns in this short span. But this calendar year, the entire 6 month span, we have been seeing some price wise correction, which is then followed by some time wise consolidation. But stock is now showing some early signs of revival. On the daily time frame charts, we can see stock traversing its 89-day exponential moving average after nearly 3 to 4 months of consolidation. And importantly, this price action is backed by stronger volume, so we expect the move to extend a bit. The next important cluster to watch out for would be around 200 simple moving average, which is placed around the 10,000 mark. So we expect the stock to give decent up move in the near term, and on the low side now 8,500, 8,300 would act as a very strong support zone.
Okay, so 8,300, 8,500 could be the important support levels to watch out for, but the outlook on Oracle's financial services continues to remain very positive. But shifting focus to the auto sector then, Tata Motors. Kanishka, we have some important commentary that has come in from the investor meet. Tell us, what are the key takeaways?
That's right. Stock is in focus after the company outlined its growth targets and investment plans for the passenger vehicle as well as electric vehicle segments. The automaker aims to capture 16% of India's car market by FY27 with a broader goal of achieving 18 to 20% market share in both cars and EVs within just 2 to 3 years. Now, Tata Motors also projects EV penetration to hit 20% by 2027 and cross 30% by FY30. Now, with signals of strong commitment to green mobility. Now, backing this vision, the company has also announced plans to invest 33,000 to 35,000 crore rupees between FY26 and FY30 in the PV segment. Additionally, the demerger process is also expected to conclude by December this year. Now, following the announcement of the roadmap going forward, the stock is up about 1% in trade today.
Okay, so that's the view coming in on Tata Motors and the view from the management with respect to outlook going forward. But shifting focus to the cement sector, that Dalmia Bharat and several other cement companies are in focus after West Bengal government revoked incentive scheme and obligations that were granted earlier. In fact, for Dalmia Bharat in particular, that's the cement company that we are talking about, 32% of its total outstanding is still due, and brokerage houses estimate the quantum to be about 236 crore rupees. So on the back of this negative news flow that has come in, Dalmia Bharat continues to be in focus today.
All right, so that's Dalmia Bharat in focus on the back of that news flow. But Sameet, coming to you on Trent. Now, interestingly, this Trent, it has, corrected fair bit, even though it had run up quite a bit. We saw a fair bit of correction also coming in at post, its Q4 results. So post this correction, do you see in the last 1 month it has picked up pace again? Do you see, are you incrementally positive on this counter now that it has seen a fair bit of correction?
After spending nearly 2 to 3 months around its weekly 89 exponential moving average, stock seemed to have formed a good base around 4,800, 5,000, and now slowly and steadily the stock is now inching upwards. On Friday, it gave first sign of some sort of revival happening. It challenges previous swing highs, and since morning the stock has been showing some good traction. So overall, on the daily time frame charts, we can see high rise, which is the positive sign for any stock after a slumber phase. And now the next important cluster would be around 200 simple moving average, like most of the mid cap counters. So next important levels to watch out for would be around 6300 to 6450 for this product counter. Slowly, steadily, we expect the stock to move higher, and on the lower side, 5500, 5600 should act as a very strong support. So any decline from current level would be a very good buying opportunity.
All right, moving on then to the next counter that is in focus today, and that's NHPC. NHPC has declared a commercial operation for the third phase of party capacity of 53.57 megawatts of 300 megawatts. Kanisar solar power project, which is in Bikaner, which is a cumulative commercial operation capacity of the above project has reached now 160 megawatts out of a total 300 megawatts that was proposed, and on the back of that, NHPC is buzzing in trade with gains of 2.5%.
Okay, so that's the news as to why NHPC is in focus today, up 2%. But let's shift focus to Mahanagar Gas then. We had some important commentary that has come in from the analyst day meet that was conducted last week. Rabinder, tell us, what does the management say with respect to growth and outlook for the next few years?
Well, as on back of analyst meet, key takeaways, MGL is in focus, where Motilal Oswal has maintained their buy rating with target price of rupees 1716, and their management maintain its 20% year-on-year volume growth guidance for next 2 to 3 years, and by FY30, the company aims to add 250 CNG filling station and upgrade existing station. And Nuvama has also come out with a note, and they have maintained their reduced rating with target price of rupees 1224. They say that the MGL expect healthy volume growth to continue on expansion of infra, target marketing, CNG competitiveness and pickup in LNG fueling, and healthy volume growth momentum to continue. Further upside likely, but margins concern amount due to the sourcing mix exit, and they have cut FY26 and 27 EBITDA estimate by 2% on faster mix deterioration. So back of this, Nuvama has retained their reduced rating on sector multiples de-rating due to ad hoc government policies causing uncertainty. So back of the analyst meet, stock is in focus, and the stock is up more than 4.5%.
All right, moving on from MGL to the next counter, Sameet, you picked out a PSU banking name, Bank of India. Now, this bank is another one that has been it has been doing well. In fact, tell us what do you see on the charts for this one? It is actually another counter which is trading at its 52-week high today of 129. From here on, do you see more upside?
Certainly looks like. In fact, the entire PSU banking basket has been on a roll since last couple of weeks. We have already seen some of the stocks reaching their all-time highs. So Bank of India is now likely to is likely to have some sort of catch-up move to its larger peers. As far as stock price is concerned, stock is now surpassed its important cluster of 120, 121 with decent rise in volumes. And looking at the overall momentum oscillators placement, we expect this stock to continue this northward move at least towards say 135, 137. So probably in next couple of weeks time, this stock is likely to give another 6 to 8% move. It's a good buy at current level also, and any depth from current level towards say 125 would make it an attractive risk to reward candidate. So overall 125, 120 should act as a very strong support zone for this counter.
Okay, so that's the view coming in on Bank of India, but let's shift focus to gold financers. Then Manappuram and Muthoot Finance, they were in focus on Friday after Reserve Bank of India increased loan to value ratio to 85% from 75% earlier, and they continue to be in focus today as well. Kanishka, tell us, what is the news flow here?
That's right. The news flow is actually the revision of gold loan norms only. In fact, the rally that we saw on Friday has been continuing. Now, just to give you an overview, RBI has announced key changes to the gold loan rules, providing relief to some small ticket borrowers. Now, it has increased the loan to value, that is LTV ratio, from 75% to 85% for gold loans of up to 2.5 lakh rupees per borrower. This includes the interest as well. Now, in simple terms, if the gold is pledged worth 1 lakh rupees, borrowers can now get up to 85,000 instead of the earlier 75,000. This move is aimed at improving the access to credit for household and small businesses by easing liquidity constraints. Now, the RBI governor also declared that the credit appraisal norms will not apply to these smaller gold loans, reducing documentation burdens on the borrowers. Now, if you look at the stocks of gold financers following the revision of these gold loan norms, Manappuram Finance and Muthoot Finance, both of them have been trading nearly 3.5% higher today, continuing the rally that they saw on Friday.
All right. Speaking of Muthoot Finance, it sees a huge opportunity in gold loans amid growing demand. George Alexander Muthoot adds that they are unlikely to see any intensifying competition coming in from the banks. Let's go across and listen into what he had to say, and then we'll slip into a short break. And after the break, we'll get you more buzzers on the other side.
More and more people are coming forward to pledge their gold and take loans. So it is not that competition. Everybody in the last 1 year, banks have also increased their portfolio by 50%. We have increased our portfolio by 40%. So everybody is growing. The market is really expanding. It is a market which is expanding. So more and more people, players coming into this, especially the banks, is only expanding the market. To maintain the health of the NBFCs, I think increasing the non-microfinance percentage from 25 to 40% is certainly in the right direction. They can think of giving some more little better loans or even some secured loans in this 40% so that the blend of risk is reduced. I'm sure after two quarters things should stabilize, and the 40% non-MFI is definitely a step in the right direction, which will improve the health and the health of the microfinance NBFCs.
Back, is still tuned into Market Fatafat right here on ET Now. This is the show where we discuss all the stocks that are buzzing in trade today. And let's put the spotlight on NTPC now. Some operational updates coming in, where the company has informed the exchanges that upon a successful commissioning 193 megawatt out of 245 capacity at Rajasthan, this particular project has now been declared for commercial operations. So commercial operations have begun at this particular project in Rajasthan. And with this, the company says that the total installed and commercial capacity of NTPC on standalone and group basis will now become 59,606 megawatt and 80,700 megawatts respectively. So some operational updates coming in over here. NTPC is sitting with gains in excess of 1% in trade today.
All right, moving on then from NTPC to Emphasis. Sameet, you picked up Emphasis for us. Tell us what's on the charts for Emphasis.
The Emphasis is showing some encouraging signs as far as daily time frame is concerned. Stock prices have been consolidating since the last 3 to 4 weeks in a very slender range of 2400 to 2550, 2600. Since morning, this stock has been buzzing. So we expect this stock to come out of its recent consolidation zone. 2800, 2850, these are the next important levels to watch out for. On the low side now, we can see a formation of higher highs, higher lows on daily time frame chart. So the base earlier, which was around 2300, 2280, it has now shifted higher towards say 2420 to 2450s. So at least for next few days, this stock is likely to do well. And as I said, 2800, 2850, these are the next important levels to watch out for.
All right, moving on then from Emphasis to next set of counters, which is the banks. Now, a couple of banking names that are in focus today, on the back of the RBI policy. And RBI's Investec has come out with a note. They say that the RBI's structural liquidity easing via the reserve ratio cuts, potentially unlocks 10% credit carrying capacity for the system after including the multiplier effect. Also, they believe the RBI's positive stance on liquidity and hence credit growth is a positive re-rating catalyst for the banking sector. Now, RBI stance has been reversed from accommodative to neutral, signals lesser headroom to cut rates significantly from here on, but NIM's pressure from 100 basis points repo rate cut are already being priced into a base case model estimates across banks, but the NIM's benefit of 10 basis points from the CRR cut is an incremental positive for the sector. Now, RBI's positive stance on liquidity and hence credit growth is a positive re-rating catalyst for the banking sector, and Axis Bank is one of their top picks along with ICICI Bank and Kotak Mahindra Bank amongst the large banks. And from the mid-cap space, they're positive on IDFC First and Bandhan Banks that are relatively key beneficiaries of RBI's significant easing as they have higher funding costs and higher proportion of fixed rate loans. On the back of that, these counters, specifically from the banking names, are in focus.
Well, yes, but let's put the spotlight on one of those banks then, Punjab National Bank, and in an exclusive conversation with PNB's MD and CEO Ashok Chandra. He shares the impact of RBI's decision to cut CRR by 100 basis points and also shares PNB's vision in terms of NIMs going forward. Let's go across and listen in to that excerpt.
100 basis point rate cut has happened in the last 5 months. And the CRR cut definitely, it is a very, very calibrated move by RBI, and we all appreciate the move of RBI. Definitely we will take it forward, and the guidance which is very clear now, growth has to happen in the system. And PNB being one of the largest banks in the country, definitely we are going to play a very, very important role in the credit augmentation and credit growth. So I must appreciate the move by RBI, that at the one point they have reduced the repo rate by 50 basis point, and at the same time they have given the cushion for the bank to earn income out of the money which will be freed out of this CRR cut now.
All right, moving on then from the RBI policy and the benefiting banks. Rapinder, coming to you, you picked out Glenmark Pharma from the pharmaceutical pack. Tell us what's the news flow here.
Well, as Glenmark Pharma is in focus, the company has announced the upcoming launch of blood cancer drug in India, following approved by the Drug Control Journal of India DCGI, and the drug will be marketed in India under the brand name Brukinsa, an innovative therapy developed by BeiGene and a global oncology leader committed to delivering advanced treatment for cancer patients worldwide. And this is the first and only BTK inhibitor approved in India for the treatment of 5 distinct B-cell malignancies. So back of this, stock is up approx 1%.
Okay, so that's the view coming in on Glenmark Pharma. But shifting focus then, REC. Sameet, tell us, why is this stock on your radar this afternoon?
Some of these, power financing companies like PFC and REC, they underwent some decent price-wise, correction in last 6 odd months. Recently, we saw a good phase of, consolidation, wherein stock prices remained within a slender range of 400 to 380. Now, on Friday, we've seen some early signs of revival, followed by a good gap up opening today. So, and since morning, the stock has been buzzing. It is now challenging its 89-day exponential average. So, going ahead, once the stock surpasses 430 and closes above it, we could see this move getting extended towards 445, and after 445, there's no major resistance before 480. So overall, the stock is now attempting to come out of its recent slumber phase. Volumes have increased in last couple of days, which is clearly a positive sign for this company.
All right, so that's REC on the chart. But with that, it's time for a quick breather. Don't go anywhere. On the other side, we're getting you more buzzers, so stay tuned.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं।